Okay, good afternoon, guys. This week number 34, 2020. Okay, so let's talk about what we have for this coming week. Okay, so today I'll be talking about in the three categories. The first one will be, of course, into the news and item that we expect to come up in this coming week. And the second one is, of course, I will be talking about from the fundamental point of view. And of course, that will be from technical point of view. So let's start. All right, from the fundamental point of view, as you can see from here, there are the two major items I want you to take note of. The first one is, of course, is the FOMC. I think this is going to be quite an impactful one on the, especially on oil price and of course Canadian related pairs. And second one is, of course, the FOMC items. All right, so these are the two major items that I want you to take note of. So this is going to be a in the market moving news, in my opinion, or data rather sometimes. So other than that, we have other items such as like euro, euro and British pound as well. So this week going to be quite I think it's going to be a busy one, right? Going to be a busy one, but not exactly on today, because today is stay on the Monday, and as you can see from the screen, we do not have much item on Monday. So please be careful when you're trading on Monday, because I don't want you to have a case whereby, Monday, the market trigger you to take some action, and, just to prove you again round that, along the week, market go in another direction, and you are totally happen to be in the opposite of the particular direction. Okay, so I want you to take note of that. Okay, so this is on the news and items that will be coming up. So there are other fundamental items that I'm a bit more on the monitoring at the moment. Is that okay? One of them is a put call ratio. So put call ratio can, if you put it loosely, when the put call ratio are extreme into the one direction or one and the one, I would say, either on the put side or on the call side, right? It can sort of like can spell the sort of like either overbought or oversold condition. All right, it is a bit more of the contrarian indicator, right? So what happened on the last March, I'm sure you remember, in the last March, right, we have a big market sell down, right? So this is exactly what happened. And you can see that during the last March, you can see the put call ratio is like, I think if I'm not wrong, is one of the all-time high at that period, right? So what happened was that in the market, there are a lot of put option purchase, right, and against a call option, of course. So that caused the market to spike up. That's caused this put call ratio to spike up, right? So now it's in the another way around. We are seeing the put call ratio in the almost on the sort of like a very low condition. But there's a certain things that changed over the last week, right? You can see that they are no longer that as low as they used to be. So this is to tell me something that if they are keep on the low side, if giving us a signal that market is like topping out, right? If the put call ratio is on the all-time low, or they're on the low side they're on the low side for quite a long time, just to show that people are complacent, right? And they're purchasing very minimal put option compared to the call option, and it is kind of signal, or is kind of from the contrarian point of view, it is to telling us the market is about to sell down rather, right? For this case, we are not seeing that case anymore. You can see that this put call ratio is sort of like making a rebound. Sorry, I am expecting, okay, we may not be at the market top just yet, okay, from this by analyzing from this point of view. And if we look from the Fed holding, all right, you can see that in the last June we have a big of blip down, right? You can go back and take a look on in your stock index chart, right? On the last June there was a sell down, not a big one, but there was a sell down. I think this is in line with what we are seeing in this Fed holding. All right, so as you can see, we are no longer that low as well. You can see that we are of course no longer that low, and we are making a minor climbing up. So this two indicator is giving me information that we might not be at the top right now, market top right now. So that's mean market can go up a little bit more higher, or a lot higher. Okay, so of course the analysis will change, right? If we are seeing the this number start to change and start to this, for example, like this Fed information start to go down a lot lower, okay, then our analysis will change, right? But for now, we are not seeing very potential sell down at the moment. All right, so market stay on the, put it this way, on the uptrend as far as we are concerned. All right, so this on the technical point of view, this on the fundamental point of view. The last data that I would like you to take a look is that, of course, this is on the Fed holding as well. So you can see this is sort of like taken from one of the newsletter that I follow. All right, so you can see that there was a very big spike, right? You can see in the 2008, it is more of the macro data. All right, so don't forget about if you're trading 5 minutes time frame or stuff like that. All right, it doesn't really concern you, but it is good to know. It is good for you to know in the bigger picture. All right, so as you can see in 2008, the Fed, what they did was, of course, they ramp up a lot of QE, right? QE1, QE2, QE3, and eventually in the late 2019, we have a repo spike, right? So because of this, Federal Reserve basically they pump a lot of liquidity. I will not say money printing, okay? They pump a lot of liquidity into the market. All right, because, okay, sorry, backtrack a bit. I will not say money printing because they are not printing money. Okay, they are not printing any physical money, but they have a way to do. They have a way to increase the liquidity into the market by not printing money, but they have other means. All right, so I would say injecting the liquidity rather. So you can see that they have a very big steep slope up over the past few, I would say, less than 8 months, right? So it's like this is not something that we have ever seen before. You can see from 2008, yes, printing money, but look at the steepness, right? So something got to break, right? So we are seeing a result of this action in the commodity market at the moment. So that's a reason why we are seeing commodity prices are soaring. Of course, first it started with gold and silver. I think it will eventually carry over or spill over rather in the other commodity market as well, especially on like a soft commodity such as like food item, right? Okay, so this is all I have for fundamental point of view. So okay, just recap a little bit. So I'm expecting, looks like because of the massive liquidity injection, we may not be seeing the market top anytime soon just yet. All right, the stock market can go a lot higher. And one thing I will tell you, the stock market and sort of like a Wall Street and the Main Street are nothing to do at the moment. All right, there are a lot of betting happening on the economy right there, but it doesn't have to reflect accordingly on the stock market. So please make sure you're clear on that. All right. So so back here, so I am expecting the stock market is not really may not be topping out yet. So it can go a lot higher. It can go a little bit more higher or a lot higher first. And at the same time, I'm expecting we will see the very big high or very big rise on inflation related items. All right, so we are going to see inflation soon. All right, so now let's go back to technical. All right, so let's start with British pound US dollar. So okay, for the past month rather, we are seeing a very big rise against US dollar, such as like British pound US dollar is rising, euro is rising as well. But for now, British pound US dollar start to see some sort of like sideways mode, and I expect the market will go in this manner for a while. So, but it just I want you to think twice before you taking a shot, because overall trend is stay on the bullish side. Okay, so based on British pound US dollar, and the same thing on the euro US dollar as well. All right, euro US dollar as well. You can see that we are on the very sort of like very steep uptrend. Not that steep, but stay on the steep side on the uptrend as well. So I'm expecting market might make a retest on to what the 1.19 region or even 1.20 region. All right, 1.20 region. So try not to short it down. Okay, there are some the last information that I want to share about the fundamental is that okay, something to do with the US politics as well, because they used to receive, all right, the sort of like they call it like an employment assurance. Yeah, they call it, right? So but I think they roll out like for two or 3 months ago, but it is now starting to expire. So the people are not getting the, people are not getting the assistance anymore. I mean, in the first place, why should they they get the assistance? Right? But anyway, it's a politics, right? So anyway, so the thing here is that it can have a negative impact on the stock market. All right. So this is the only, I would say, negative factor that can have an impact on the stock market. So it is good for us to pay attention as well. So if the Congress come back and say that, oh, we are back to normal, we are still keep on paying those insurance or assurance, whatever you call it, right? I think the market will rise further. Okay, so this is something, this is some like a bottleneck that you need to take a look at. All right, of course, nobody cannot see the future, but this is something that I want you to take note of as well. All right, because politics nobody can really predict. So back to the chart. Okay, and another thing that I would like to go through is of course the oil price. Okay, as you know, we have this OPEC meeting this week. I'm expecting it gonna have a very important week for oil price, in my opinion, because as you know, the oil price have been slowly climbing. It's really in the very tedious manner, because up a bit, down a bit, but it's slowly climbing. But I expect the volatility in the market will come back this week. Okay, because I think the whole market is waiting for this week decision, because they decided to previously, I think a few months back, they decided to cut the output, right? And they decided to push, they decided to sort of like increase certain number back, but we will know for sure, I think, more information by this week meeting. So I think the whole market is waiting for that. So please be careful. Okay, I expect market may do some retest to the downward potentially, all right, because most likely they are going to increase back the production, all right. So, or rather the daily output. Okay, so this is my speculation. So please watch out for that as well. And last but not least, I still got two more items to cover. Okay, of course, gold, right? We have a big gold rise, right? Hang on, we have a big gold rise over the past few months, or 2 months rather. You can see, okay, being on the parabolic uptrend. All right, this is something that every trader should know, that is kind of like an unsustainable kind of rise. Don't get me wrong, okay, gold is still on the uptrend, okay, but I will prefer like a 45-degree uptrend will be the better one, in my opinion. All right, so what happened? So market have been pretty rapidly. So what happened? A lot of traders are piling up on the upsides, right? A lot of traders are piling up the upside. So what happened? A little bit of news, or even not anything, just a small news, just rumors can have a very big sort of like a sell on the market, right? So this is exactly what happened. All right. So what it basically did was that they really go and retest healthy uptrend that I was drawn here. I did draw here. It is around 45-degree, right? 45-degree uptrend. So they really test on the 45-degree trend uptrend, and they really just making a bounce back. So moving forward, I expect the market to be on the sideways swing, in my opinion, because of this buy and very big quick sell down. I expect market will have a bit of ripple effect. So I don't really think we will have a very big up move or down move coming up. Most likely they will go sideways within the range. It's like something that shake very violently, and they will start to slow down. So I think this is what exactly going to happen. All right, this is exactly going to happen. So please be careful. All right, I don't think the big bull rally that we witnessed about 2 months ago will come back anytime soon. So most likely in the wild swing sideways pattern. So please make sure you adjust your sort of like expectation. Okay, overall stay uptrend. Okay, so last but not least, let's go to US market. So I just mentioned that the Wall Street have nothing to do with Main Street anymore. All right, so it happened once. It's not a new thing. It's happened in Weimar Republic in the, I think, the late 1920s, 1930s. German was suffering a very big inflation, right? German was suffering because of so-called they lost the World War I, right? And what happened was that they are rather in the hyperinflation. They call it Weimar Republic at the time, and you can see that even though people on the street are suffering, the stock market was doing rather well. I think this is I think the history might repeat itself again. So I am still expecting the market still can rise up a little bit more, at least higher first. So before you shut down on this stock index, I was saying that, you know, the whole economy is very bad, you know, you got to be careful, all right? Because the market still can rise a lot higher because of a lot of liquidity being injected in the market itself. So thank you for watching. If you like my presentation, okay, please like, subscribe, and of course share my video as well. So I will see you guys next week. Thank you.